Well, hello and welcome to Business 360. I'm Ashmit Kumar, and here are the headlines that we're tracking this evening. Sensex and Nifty failed to hold early gains and end with marginal losses. Bank stocks also decline, and mid-caps see sharper cuts. Shares of Reliance Industries rally in trade as the conglomerate begins to unlock value. Moves to acquire third-party stake in Reliance Retail at a hefty price. Also sets July 20th as the record date for allocation of shares of its financial services arm ahead of its proposed listing. Securities Appellate Tribunal refuses to grant interim stay on Sebi's restraining order against Z promoters Subhash Chandra and Puneet Goenka. Gives them 2 weeks' time to file their reply. The market regulator had restrained Z promoters from holding key managerial positions in any listed entity. Sebi filed a fresh affidavit before the Supreme Court in the Adani Hindenburg case, opposes the expert committee's recommendation to prescribe timelines for investigations and overhaul the settlement facility. The Mahindra Group needs to grow five-fold in the next 5 to 7 years to remain a growth gem, says Group CEO Anish Shah. Points to a turnaround in the financial services business and a planned revamp of Tech Mahindra over the next 2 to 3 years. That's an exclusive. Mahindra Group will not dilute its stake in the electric vehicle business more than 2 to 3%, says Anish Shah. Adds that the group is generating sufficient funds and that they are not keen on too much dilution. Private equity player BainCapital is eyeing control of the ice cream maker Vadilal. Sources say discussions are underway and the ice cream business is valued at 3,000 crore rupees. That's another exclusive. Kalanidhi Maran-owned Sun Group rejects reports of talks with SpiceJet, says there is no question of an amicable settlement on payment obligations, adds that the hope that the airline will comply with the Supreme Court order and pay the interest amount of 386 crores. The centre issues a notification to bring the Goods and Services Tax Network under the ambit of the Anti-Money Laundering Act. The move mandates information sharing between GSTN and the Enforcement Directorate and Financial Intelligence Unit, gives more teeth to the agencies in their fight against GST evasion. At least 22 people are dead after torrential rains lead to flooding in parts of North India. Met Department warns of more heavy rains in Himachal Pradesh, Uttarakhand, Punjab, Haryana, J&K, Rajasthan and Delhi over the next 2 days. We cannot run law and order, says the Supreme Court while hearing a case on ethnic violence in the state of Manipur. Cautions warring parties against utilizing the court as a platform to possibly escalate the violence. A policeman was killed overnight in Manipur. More than 150 people have died in the last 2 months. Meta's Twitter rival Threads crosses 100 million users in just 5 days, becomes the fastest growing social media app so far. This growth is without the app being available in European countries. Well, let's begin with the day's market action. Sensex and Nifty perked up in opening trade but failed to hold on to those gains. In the end, Sensex ended in the red, losing over 60 points and the Nifty lost about 20 points. Now, bank stocks also declined in trade, but mid-caps saw sharper cuts. The mid-cap index lost nearly 140 points. India will become the world's second largest economy by 2075, leaving behind Japan and Germany, as well as the United States. That's according to a report by Goldman Sachs. The report projects that India's GDP will expand dramatically with a population of 1.4 billion people and cross $52 trillion. It also says that India's progress in innovation and technology, working age population ratio and higher capital investment will drive the economic growth. Well, shares of Reliance Industries hit a 52-week high today as the conglomerate moved to unlock value. There were two major developments. The promoters are moving to acquire third-party shares in Reliance Retail at a hefty price. The financial services arm, meanwhile, is gearing up for its market debut. Sonia Shenoy is joining us now to explain why the shares are on a tear. Sonia.
Well, Reliance Industries is undoubtedly the biggest gainer today and is very close to its all-time high of 2755 rupees. First, let me start with the news. The board of Reliance Retail has approved a reduction in the equity share capital of Reliance Retail with a consideration of 1362 rupees per share. Now, the other piece of news is that July 20th has been fixed as the record date for the demerger of Jio Financial Services. Let's try and understand the implications of both these pieces of news. Now, Reliance Retail's decision to reduce their non-promoter shareholding is a big positive for Reliance. Remember, brokerages had ascribed a value of 900 to 1,000 rupees a share in their SOTP, while the actual consideration is much higher at 1362 rupees a share. Also, Reliance Retail's buyback is expected to be a precursor to the IPO, the eventual listing of the consumer business, and a part of a larger succession plan. As per Bloomberg's data, Reliance Retail's SOTP expectations ranged anywhere between 850 to 1,000 rupees a share, and this is a big positive. So, these are the brokerages that are up for you on your screen. There's JP Morgan, HDFC Securities, Daulat Capital, etc. Now, brokerages continue to be bullish on the stock. So, since we were talking about JP Morgan, let's get their view on board. They have an overweight with a price target of 2960. They say that the valuations of Reliance Retail at $90 billion are sharply higher than the implied equity value at which the stakes were sold in RRVL way back in 2020. Let's talk about the other piece of news, which is the Jio Financial demerger. The Jio Finance demerger record date has been announced as July 20th, post which the company is likely to list. Now, the strength of Jio Financial Services also lies in the credibility of the people they have hired. Hitesh Sethia, as we know, has been appointed as the MD and CEO of Jio Financial Services. Sethia has a great track record. He has over 2 decades of experience in the financial services space, largely with ICICI Bank, which was where he served his last tenure before joining Jio Financial Services. Let's take a look at some numbers. JFS will be infused with 6% of Reliance Industries' treasury shares. This implies that Jio Financial Services will start with a net worth of $13 billion versus Bajaj Finance at $7 billion. Once Jio Financial Services is infused with the 6% Reliance treasury shares, it will be the largest NBFC in India in terms of net worth. Back to you.
Well, no relief for Zee Entertainment promoters Puneet Goenka and Subhash Chandra. The Securities Appellate Tribunal has refused to stay Sebi's June 12th order. Sebi had barred the two from holding any key managerial positions in any listed entity. The SAT has said that it saw no reason to intervene in the matter. This comes at a time when the NCLT is deliberating on the merger proposal between Zee and Sony. Yash Chen joins us with more details. Yash, a fresh setback for the promoters?
Well, disappointment coming for both Puneet Goenka and Subhash Chandra from Securities Appellate Tribunal. The tribunal in its order today has refused to grant stay to both these parties against market regulator Sebi's order, which restrained both Puneet Goenka and Subhash Chandra from holding any position of directorship or KMP in any of the listed entities. Now, that order from Sebi just did not concern Zee Entertainment, where Puneet Goenka is the managing director and CEO, but it also concerned the merged entity between Zee Entertainment and Sony, where Puneet Goenka is to assume the position of managing director. Market regulator Sebi's allegations for around siphoning of funds and diversion of funds of about 200 crore rupees. According to Sebi, a sum of 200 crore rupees was lent to about 7 entities which are in question. This money was supposed to be repaid back to Zee Entertainment, but instead of that, what happened is Zee Entertainment, through multiple layers of transactions, paid various vendors. These vendors, in another layer of transaction, paid that money ultimately back to these 7 entities in question, which then repaid it back to Zee Entertainment. Net, according to Sebi, this was fund diversion. There were bogus entries to support these transactions, and net, no money was repaid back to Zee Entertainment. The Securities Appellate Tribunal acknowledged this argument, refused to grant stay to both the entities against Sebi order, also asked both Puneet Goenka and Subhash Chandra to file their reply before market regulator Sebi within the next 2 weeks, and then Sebi decides whether to vacate its order or not. Interestingly, in the last hearing of the merger matter at NCLT, Puneet Goenka's counsel had said that Puneet Goenka, as the MD or not in the position of MD, the merger process should continue. Now, it is really interesting whether in today's hearing at NCLT in the merger matter, the tribunal takes acknowledgement of that argument from Puneet Goenka's counsel, or it gives more weightage to SAT's order today and postpones hearing by, let's say, a couple of weeks.
Right, Yash, thanks a lot for that. The market regulator Sebi has filed a 41-page affidavit before the Supreme Court in the Adani Hindenburg matter. Sebi has opposed some recommendations made by the expert panel. Sebi is not in agreement with prescribing timelines to conduct its investigations. Sebi argues that timelines can vary depending on the nature of the case. Sebi is also opposing the proposed overhaul of its settlement facility. The expert committee had proposed a robust settlement facility, but Sebi argued in favor of its current settlement rules, which have been in place since 2018. Well, here's a CNBC-TV18 exclusive. Anish Shah, the managing director and CEO of Mahindra and Mahindra Group, says business across the group are firing on all cylinders. Speaking exclusively to Shireen Bhan, Anish Shah said that the group needs to grow 5 times over in the next 7 years to remain a growth gem. Speaking about the EV business, Shah said that the group is well capitalized and is not actively looking for funding, but he also added that M&M may dilute another 2 to 3% in the EV subsidiary. Take a look.
What we are seeing is all our businesses are starting to really fire on all the cylinders. We started with discipline and capital allocation. As soon as we had a good handle on that, we pivoted to growth. And what we are seeing is mega growth across many of our industries. We've got 4 core businesses in excellent shape. Our growth gems were started with a target of getting to $1 billion of market cap in 3 to 5 years. We saw that many are getting close to that target, so we took the bar up a notch higher, and we said that's not enough. Now we need to grow 5x in the next 5 to 7 years to remain a growth gem. There's a huge focus on technology and data. There's a tremendous focus on asset quality and ensuring that we maintain a very strong asset quality. And the results today bear that. We've had GNPAs in the 8 to 9% range in the past, went up to 16%. Today they're in the 4 to 5% range. And it's not just where they are today, it's the actions taken to ensure they don't go high again in the future at any point when there's an economic shock. So these are things that are really enabling Mahindra Finance to start showing the strength it has, because the rural and semi-urban franchise that Mahindra Finance has is better than anyone else that we've seen around. We have never actively looked for funding in our EV business. Even when BII came in, we had discussions with them at that point on a variety of things across the group, and they were very interested in EV. And we said that we have enough capital, we are generating enough funds in our auto business, so we really don't need it right now. BII has come in with a 2.5 to 3% stake, and we may look at another 2.5 to 3% stake at some point in time. Coming to Tech Mahindra specifically, we are below on margins, and therein lies the opportunity. Similarly, in Tech Mahindra, we feel that there have been a lot of good wins in expanding beyond telecom, in having new accounts, large accounts come in. There needs to be a lot more work done on margins. And Mohit Joshi, as he comes in as a new CEO, working closely with CP as the outgoing CEO, will work together to address that. And we feel that we know today what needs to be done. It will take time. It's not going to be overnight. But I would give it a 2 to 3 year horizon.
Well, here's a CNBC-TV18 exclusive. BainCapital is in talks to buy ice cream maker Vadilal. Sources tell us that the ice cream business is valued at 3,000 crore rupees as per the deal talks. Now, shares of Vadilal Industries surged after the news. Nisha Podar is joining us now with more details. Nisha, take us through the details.
That's right. Sources with direct knowledge have shared with CNBC-TV18 that Vadilal, which is a homegrown ice cream maker, has seen interest from a bulge bracket private equity firm, BainCapital. This is what we gather from multiple sources with direct knowledge of the transaction there. We do gather that BainCapital is interested in a majority controlling stake in the combination of Vadilal Industries, enterprises, as well as the Vadilal brand. Now, let me just explain the structure to you. Vadilal Industries is the manufacturer of ice cream as well as frozen food. Enterprises, another listed entity of the group, looks at marketing as well as sales of the ice creams, and Vadilal as a brand is a promoter entity. Now, earlier, Vadilal Industries had taken shareholder permission for buying out the brand from the promoter entity. So, a combined merged entity is what BainCapital could be looking at buying, and would be looking at that particular controlling stake. And remember that the consumption story is something that the private equity firms have always been interested in, and that buyout trend has been really picking up, and we have seen many deals on those lines as well. So BainCapital is in talks. We hear that the transaction may value the Vadilal's ice cream business over 3,000 odd crore rupees. But remember, word of caution there for the investors and minority shareholders. In the past, Vadilal Group has been in talks with upwards private equity vertical as well to sell stake in the company, and the promoter dispute had come in the way of finalizing this particular transaction. We reached out to the company. We didn't get any response on these deal developments. Of course, the stock has reacted very positively on our news break.
Right, Nisha, thanks a lot for that. Now, Kalan, the Maran-owned Sun Group, has rejected reports of talks with the airline SpiceJet. It has clarified that there is no question of an amicable settlement with the airline on payment obligations. In a statement, the Sun Group added that they hope that SpiceJet will comply with the orders of the Supreme Court and pay the interest amount of 386 crore rupees. Last week, the Supreme Court directed SpiceJet to pay the entire arbitral amount to its former promoter. Well, latest on GoFast's turnaround bid, the resolution professional has invited expression of interest from potential buyers for the cash-strapped airline. According to the public advertisement, 9th of August has been set as the last date for receipt from interested parties. Reuters reported that the Warrior Group can potentially bid for the airline. Remember, soon after filing for bankruptcy, the airline's earlier resolution professional, Abhilash Lal, had said in a town hall that the promoters are committed to the company. Well, in a bid to crack down on the GST frauds, the centre has issued a notification to bring the Goods and Services Tax Network under the ambush of the Anti-Money Laundering Act. Now, the move mandates information sharing between GSTN and the Enforcement Directorate and Financial Intelligence Unit. Sapna Das is joining us now with more details. Sapna, tell us, what are you picking up?
Well, clearly here the aim is, enabling the financial the FIU basically in terms of sharing details or information on suspicious transactions with the GSTN, so that the GST authorities can take action accordingly, and this would basically help them in curbing fake registrations or even fake ITC for that matter. There's a big campaign that has been underway and all kinds of details are there of how much what has been the impact of the crackdown. So, simply speaking, this basically enhances your information gathering and, the penal actions that follow post that, helps the government in better investigation. But having said that, if you look at the pace at which the ambit of the PMLA has expanded in just 8 months, November 2022 onwards, you had Competition Commission coming under PMLA, you have had DGFT under PMLA, IRD under PMLA, State Police under PMLA, Ministry of External Affairs under PMLA, CAs and CSs under PMLA, and now there's also talk of bringing the legal fraternity under PMLA, I mean making them accountable, and so that sharing of information, calling for data is possible. So and in comparison, if you look at the conviction rate under PMLA, it has been quite abysmal. So the question here also arises that yes, sharing of information and data is extremely good and maybe even necessary for the government, but is it a deterrence or does it translate into harassment? That's the whole point right now.
Right, Sapna, thanks a lot for that. With that, it's time now to slip into a very short break, but coming up, torrential rains wreak havoc in North India. Met Department warns of more heavy rains in Himachal Pradesh, Uttarakhand, Punjab, Haryana, J&K, Rajasthan and Delhi over the next 2 days. Special reports from the ground on the other side. Well, here's the big national story today. Landslides, flash floods, waterlogged streets. Heavy rains have thrown life out of gear in large parts of northern India. Over 20 people have lost their lives across states. Himachal Pradesh has been the worst hit. Cloudbursts triggered landslides and flash floods in the region. A red alert has been issued in several districts. Heavy rainfall wreaked havoc in neighbouring Uttarakhand as well. Water levels in several rivers were above the danger mark. The Met Department has warned further rainfall in North India. 39 NDRF teams have been deployed in Punjab, Uttarakhand, Himachal Pradesh and Haryana. Our team of reporters get us the latest from rain-battered states.
हिमाचल प्रदेश के कुल्लू जिला सहित मनाली में बीते 24 घंटों से बारिश का दौर लगातार जारी है, जिसके कारण यहां पर बाढ़ जैसे हालात हो चुके हैं। अगर मैं बात करूं सबसे पहले मनाली तो मनाली में जो है यहां पर भारी बारिश के कारण जो है नेशनल हाईवे 3 पूरी तरह से क्षतिग्रस्त हो चुका और इसके कारण यहां पर जो कुछ मकान वो भी जो है बाढ़ की चपेट में आ चुके हैं। इसके साथ ही जो आलू ग्राउंड में जो जहां पर जो है 27 से 28 के करीब जो लोग आलू ग्राउंड में फंसे होते हैं उन्हें आज सुबह जो है प्रशासन द्वारा वहां पर होमगार्ड के जवानों द्वारा उन्हें सुरक्षित वहां से रेस्क्यू कर लिया गया है। जबकि मनाली से आगे कुल्लू के मध्य जो है कई स्थानों पर नेशनल हाईवे 3 पूरी तरह से जो है क्षतिग्रस्त हो चुका है, जिसके कारण जो है मनाली के जो संपर्क वो कुल्लू से यहाँ पर कट चुका है। हालांकि कुछ एक लिंक रोड जो है खुले हैं, लेकिन उन्हें जो है प्रशासन ने फिलहाल वाहनों की आवाजाही के लिए बंद कर दिया, क्योंकि कई स्थानों पर भूस्खलन आने का भी खतरा लगातार बढ़ा हुआ है।
Rain in Delhi has crossed a 41-year-old high. Though waterlogging has started subsiding in certain areas of Delhi, another danger still lurks. Haryana yesterday had released over 1 lakh cusecs of water in Yamuna, and the water level in Yamuna is expected to rise even further by tomorrow. The Delhi government is taking ample steps to ensure that people living on the embankments and on the floodplains of Yamuna are evacuated in time, even as Yamuna is just 1 meter shy of its danger mark. It remains to be seen how the things are going to pan out in the next few days, even as the IMD has predicted light rains and thunder showers in Delhi for the next 7 days. Waterlogging still persists in areas of Delhi, and IMD has also projected red alert for various other parts of North India, even as the monsoon is going to continue in full swing. Several areas in North India are still experiencing heavy rains and thunderstorms, and in the Himalayan region there have been evacuations also which have been carried out by the administration and by several security forces.
Situation is due to interaction of a strong westerly system with very active monsoon southeasterly flow. This interaction has been happening in a north-south oriented zone for the last 2 days. It is likely to continue today and move slightly eastwards and continue tomorrow also. We are expecting tomorrow Himachal Pradesh rainfall will decrease. We are only expecting heavy rainfall over Himachal Pradesh tomorrow, but Uttarakhand, Punjab, Uttarakhand, Uttar Pradesh, parts of Haryana, Rajasthan, Madhya Pradesh, these regions will continue to get heavy to very heavy rainfall tomorrow also.
Meanwhile, violence continues in Manipur. In an overnight clash in West Kangpokki region, 1 policeman was killed and nearly 10 were left injured. In the last 2 months, over 150 people have lost their lives and over 300 people injured. Over 50,000 people have been displaced. Well, from violence in Manipur to violence during the Bengal Panchayat elections, close to 40 people lost their lives over the weekend as widespread violence was reported during polling. Last Saturday, the Election Commission declared voting in close to 700 booths across 19 districts as void. Repolling was held today. Well, discussions on the need for a digital competition law is in its final stages. A high-level interministerial committee may take a decision on recommendations within a month's time. The committee has spoken to various stakeholders, including content creators, app developers, and tech giants. The debate about whether India should consider going for ex-ante regulations at this stage is picking up. From big tech companies to smaller players, many stakeholders have raised concerns about such a move and its implications on India's fast-growing digital market. Shivani Bazaz brings us this special report.
The Committee on Digital Competition Law, formed by the Ministry of Corporate Affairs, is working on a draft Digital Competition Act. Even though the contents of the draft are not known yet, it is likely to be influenced by the European Union's Digital Services Act. While the European Union has notified Digital Services Act, which comes into effect in 2024, countries like United States, Australia, South Africa and the United Kingdom are also in the process of bringing in additional regulation for the digital economy. In India, the Parliamentary Committee on Finance had recommended a separate ex-ante law on the lines of European Union. Ex-ante is Latin for beforehand. So legally, any law that comes into effect before the occurrence of a situation is called an ex-ante law. So why are ex-ante laws important?
When you come up with an issue like protection of privacy, if you leave that to an ex-post regulatory system, then it's inevitably too late once there's a big data breach or something like that. So an ex-ante rule, whether it's through a law or a code or a contract even with the companies, that they will protect consumer data in a certain way, that can be an ex-ante provision.
While one view is that there is an urgent need for ex-ante regulation, many experts believe that India's existing framework has enough safeguards to regulate big tech.
The CCI actually has enough powers today to be able to investigate digital economy companies, as is evidenced by the fact that they have over 25 ongoing investigations. Given that the CCI has that power, ex-ante is not really needed, right? So neither is the EU model, the DMA, which is the Digital Markets Act, which is yet untested and hugely prescriptive. I think it will impact both investment and innovation adversely. Intervention should happen not in nascent markets.
Various stakeholders like the Internet and Mobile Association of India and 58 smaller stakeholders, including the Cyber Cafe Association of India, sent a representation to the MCA making a case against the ex-ante digital competition policy.
If you look at our economy, we are not Europe. We want to encourage startups. We want to encourage entrepreneurship. So we should not bring in a blanket rule which can be detrimental. And do remember that ex-ante regulations are very new. It has not been tried and tested. In fact, even in EU, the adoption would be from 2024. And there is also a concern which is raised that EU is not entrepreneur friendly.
While the debate continues on whether or not ex-ante regulations should be brought in at this point, it remains to be seen if the Ministry of Corporate Affairs can bring the new law to the Parliament in the winter session this year, or would want more time for deliberations on the recommendations of the high-level Inter-Ministerial Committee on Digital Competition Law. In New Delhi, this is Shivani Bajaj.
Well, with that, it's a wrap on this edition of Business 360. Thanks so much for watching. Stay tuned to CNBC TV18. The news and updates continue on the other side.